And I don't buy in to the lies. I just don't. Yes, I personally do not own any stocks or bonds or ETFs or mutual funds or annuities or any of that fiat money garbage, because I am crystal clear that we're at the end of this currency's life cycle. And once they've gotten all the purchasing power, which essentially they have, then they must attack principle. And that's what's coming up next. And since you and I spoke, look at how much of the physical market, because in the US, it's primarily just a digital market, a trading market. In Europe, it's been more of a physical market, but look at how much of that physical market was, and I'm going to use the term because I think that's what happened, repatriated back to the US from especially the Bank of England. And since it wasn't the Bank of England's gold, because they're not sitting on a whole lot of their personal gold, but they are sitting on a whole lot of other sovereign gold from countries around the world. So what gold did they ship over here to us? I'm thinking it was, and maybe I'm wrong about this, but I'm thinking it's a lot of that sovereign gold. What happens when the governments request their gold back? That still lies in our future. We haven't seen that yet, but that's going to overwhelm. I think, I could be wrong, but I think that will absolutely overwhelm the market's ability to hide the truth. And you can't go by the price that on anything. I don't care what it is. I mean, do you really think that stocks at nosebleed levels are a true valuation of what is happening in the economy? Because if enough governments request their gold back at one time, and we saw this a little snicker snack taste of it in 2014, 15, in there with the sovereign debt crisis in Europe. And a lot of countries at that time repatriated and asked for their gold back. And even the Federal Reserve of New York, when Germany asked for it, they said, okay, you can have it, but it's going to take us, I think, 6 or 7 years or something. It didn't quite take them that long. They got it back before that, but they had to buy a lot of time. And I think it's much worse now. So that lies in our future, but you need to have the physical metal in your possession, because if you don't hold it, you don't own it. Yeah. And if a government needs to do an overt confiscation in order to make that happen, they will. And if it's sitting in a retirement plan or something like that, where you're not holding it anyway, that's where most of it is in the US. Most of it's not held privately. Well, you're going to see that kind of explosion. And the truth will begin to express itself. It's not going to fully go there to its fundamental value yet. Yeah. That happens when they're attempting to regain confidence. Well, I don't think so. I mean, it doesn't for me personally, because I understand the true value of an ounce of gold, and I also understand its full functionality. Mm-hmm. Now, if it didn't have that full functionality, then I would have to say yes, because there would be no other way to accurately, ultimately value the gold and its importance in the market. And what I mean by that, because somehow Wall Street never really talks too much about how gold and silver are used in every single sector of the global economy. Mm-hmm. So you have the greatest functionality, but you also have the broadest base of buyers. When you're looking at trading contracts like we do here in the US, that's one area. And, the private clubs that you're talking about, it is really about managing perception. Yeah. That's what it's about. And so there will be a rise, because there always is. I mean, we've had over 4,800 currencies that do not exist anymore. So we have lots and lots of examples. And at the end of the day, central bankers will use gold to attempt to regain the public confidence. And that is when you will really see gold start to move toward its true fundamental value. And that's based upon, the amount of debt that's been created, because this is money. This is fiat money. This is sound money. They're both money. They're just the opposite side of the coin. This is used in one place. This is used every place. So what'll ultimately happen as loss of confidence in not just dollars, but that would be true euros, yen, all of them, right? Loss of confidence in the fiat money system will drive the value, not the value, but the price of this, the visible price of this to its true fundamental value. But it will not happen until governments are forced to attempt to regain the public confidence. Maybe it's more truth because we are watching them accumulate global central banks, meaning accumulate more gold than they ever have historically in the last 3 years. We also have central banks, especially the Federal Reserve, that are running losses. And I believe we are now in the 4th year of losses for the Federal Reserve. That's unprecedented. That has never happened before. Because how do central banks make their money? Does anybody ever ask that question? And it's actually pretty simple. It's seigniorage, right? It costs, well, this happens to be a $10 bill, but if there's a $100 bill, here's one, okay? It costs 9.4 cents to print a $100 bill, less to push a button and create it. Now, you and I have to work 100 times harder for this, but that difference between the cost of creating that money and the face value of that money is central bank income. And that's what they use to fund their operations. And whatever they don't use up in a year goes to the treasury. And so we are now in the 4th year of massive losses at the Federal Reserve and their inability to transfer any of that excess to the treasury. But look at how much new money they've created. Why are they in losses? Well, historically, yes, the good thing about at least the data up to this point is that if through the Bureau of Labor Statistics, the BLS, I can go back and I can pull a food basket, then it's the same food basket, right? So I pulled it from 1913 to the last one I did, 1925, a couple months ago. And that food basket, and even though the BLS's numbers are sketchy, okay, they're what I can use for consistency's sake, right? So that food basket had gone up something like 2,500% over that time frame. Spot silver, manipulated as it is, was up about 3,000%. So that's why I say it maintains your ability to buy that same stuff. Spot gold, manipulated as it is up over 16,000%. So not only does it maintain your ability to buy the same goods and services, it actually expands your ability. Neither one of them reflect the true fundamental value because a rising gold price as the primary currency metal would reflect, it does reflect the falling purchasing power value of the currency. So governments have to keep it suppressed because they don't want you to understand what's happening, because then again, you would make different choices. However, as confidence in the dollar is lost, then, or any currency is lost, then people are trying to figure out what they have to do to maintain that. So primary currency metal, and this is also the metal that they do these overnight resets. They do it against gold as the primary currency metal, which is indestructible, which is one of the reasons why it is the primary currency metal. Silver gets used up in manufacturing So it is the secondary. And, I get a lot of questions on the gold to silver ratio. And initially, here, this is my 20th of an ounce, $1 gold piece. I think you can see how teeny it is to an ounce of silver. So this is the original. And that gold silver ratio, I'm sure we will see it grow more narrow for a period of time. But as the hyperinflation kicks in and people become more aware of it, then what happens is it expands again. So gold really does protect you much better in every circumstance, frankly. 100%. There isn't even one teeny weeny doubt in my mind because there are over 4,800 currencies that have done this. And I don't think this time is different, but I do think that this time it will be a globally coordinated effort because when one country does it, it would be like a domino impact anyway. And we certainly saw since 2008 how central banks can coordinate and work with each other. And frankly, Jeremy, that 37 trillion, we are not talking about any of those quadrillions of derivatives that are written against that debt. Yeah. And I'd also kind of point out that if you think that that's all of the debt, there's this bridge in Brooklyn. I don't really own it, but I'd sell it to you. I wouldn't really sell it to you because I have more ethics than that. However, I don't believe it's only 37 trillion, but I'll use that data for calculation purposes. Right. Okay. That is exactly the choice that I have made. Yeah. And keeping in mind that I'm an ex-banker and an ex-stockbroker, and I consider myself a technician. So I believe I can read the technical language of the markets, but I am not a short-term trader. And I don't buy in to the lies. I just don't. Yes, I personally do not own any stocks or bonds or ETFs or mutual funds or annuities or any of that fiat money garbage because I am crystal clear that we're at the end of this currency's life cycle. And once they've gotten all the purchasing power, which essentially they have, then they must attack principle. And that's what's coming up next. And so, yeah, you got to I am in safety. And it's not just gold and silver. It's also food, water, energy, security, barterability, wealth preservation, community, which is arguably the single most important part of the mantra, and shelter. Because these are the things that we need to lead a reasonable standard of living. Mm-hmm. And this is what I talk about all the time. Local community to create surety in all of those 8 areas, global community to create sound money in the system and sound money is simply this. It is gold and silver that because it's used in every area of the economy, governments and central banks cannot inflate away. It is above them. That's where you need to be right now in absolute safety.